get started. Ready? 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 Perfect. And so 2 questions. Can y'all see my screen? And also, can y'all hear me well in the Zoom? Yes, yes to both. All right, appreciate it. Thank you. Let's get started. And so let's go from here. So what I want to do here is welcome you to Vulcan Academy, the school class. And like I said, we're going to be doing this every single Saturday morning at 11 a.m. Eastern. So the introduction to day trading, I know there's a lot of things to learn in the stock market, Forex market, whatever financial market, you tend to use. At the end of the day, it's all, the same exact thing. It's just different terms, different terminologies, and, different brokerages. But you're trading something different. One can be a currency, one can be a stock company, one can be, a crypto token or coin. But again, trading, it's pretty much, it's all the same thing. So, and remember, let's keep it simple and ask questions. So let's go to the next slide, and let me actually move this to the side and minimize this. All right, cool. So how do I choose the best avatar in trading? Okay. Is it scalping? Is it day trading? Or is it swing trading? Okay. So people in the chat, let me know, what are you currently doing? Are you scalping? Are you day trading? Or are you swing trading? Let me know in the chat. What do y'all do? Okay. I mean, me personally, what I do is scalping, and also what I do is day trading. Sometimes swing trading because I do this full time. And yeah, this is something that, again, this is very, very important for you to do, is to pick the best avatar in trading. Because if you don't know what you're doing or how you're approaching the markets, then it's like you're not knowing your style. You're not understanding us in how should you approach the market the proper way, right? So we see in the people that says scalp, day trade, scalp and day trade, scalp and day trade. Okay, so we do both. We scalping and day trading is basically the same exact thing, because what you're doing here is you're buying and selling within the same day. That's what you're doing, right? And so the thing here is that with scalping, I would say what's considered as scalp trading is that you're in a date, or you're in a trade for seconds to minutes. All right, that's what scalping is. So I would say the max minutes, I would say that what's considered as a scalp would be like I guess like 4 to 5 minutes max. What do y'all think? What do y'all think that's considered like a scalp? I mean, for me, I would say 5 minutes max. That's considered a scalp. Because if you want to just get into a trade quick in and out, then okay, let's scalp. If that's the way that we like to trade the markets, then let's scalp. All right, because if you want to make $500 or $1,000 within seconds or in a minute or two, then scalping is the way to go. Okay, and I'll also explain later down the line, key examples on the charts to show you what's the differences between scalping, day trading, and swing trading. All right. So 15 minutes max, 5 to 10 minutes. So we have a few different answers about what scalping is. Okay, cool. So now scalping is, again, it's a much more faster pace. It's much very, very quick. And if you're not quick with it, then scalping could pretty much destroy you. So you have to test all these 3 things. All right. And this is why I say paper trade, demo trade, before you go into these live markets. Okay. Does that make sense, everybody? This is why it's very important to demo and paper trade first, because all you're doing is understanding and learning more about your style and your groove in trading. Okay. So this is the 3 things that I want you all to pretty much write down for the weekend and study more about. Hey, is scalping is the one, right for me? Is it day trading right for me? Or is it just like swing trading right for me? Which one is it? So now let's talk about day trading. All right. Day trading is like, it's basically like scalping, but you're holding to a trade much more longer. It can be like 15 minutes. It can be like 30 minutes. It can be like an hour. It can be maybe 4 hours, but you're still selling or buying and selling within the same day. And that's what day trading is. So scalping and day trading, you can see it's the same exact thing. But now, like I said, if you feel like the market or the candlesticks is very, very, much fast paced, then scalping and day trading is not for you. And that's where we can try to start swing trading. Because if we're swing trading, then you're holding on to a trade more than a day or two. It can be a couple of days, it can be a week, it can be 3 weeks, it could be a month, it can be 3 months. All you're doing is just, hey, let's swing it, let's take it to the next day, next week, or next month. All right. But the thing here is that swing trading is for people that have like, let's go to the next here. Oh, actually, no, let me just leave it back here. So swing trading is like for people that have like a business going on, or maybe they're in college, maybe they're in like high school, or maybe they just don't like the fast-paced movements as scalping and day trading would be, right? And so swing trading, I would say, I mean, for me, I do all three because I can sit on my computer, do this anywhere around the world. I can do this sometimes when I travel to Vegas, sometimes when I travel to, let's say Texas, or just out of the town. I mean, I can just open up my laptop, I can do this full time, and I can do these three things. But we also have to remind ourselves that, okay, how's our schedule, right? Some people have 9 to 5s, businesses, and things like that. And that's where we have to readjust the way that we approach these markets. And that's, again, very, very important, right? And so swing trading would be, like I said, perfect for someone that has a 9 to 5. They can't be on these screens too much. Can we go at work and, be on our phones all day and just look at the charts every single damn second? No, you cannot, right? If I had a 9 to 5 and I have a boss up my ass and he's like, why the hell are you on your phone? Then scalping and day trading can't be for me. I got to swing trade. What do y'all think though? What do y'all think in the chat? Isn't that facts? Isn't that true? Because if you really want to scalp and day trade, then you have to have dedicated time for yourself to be on these charts. All right. That's if you only want to just, trade the in and outs of the markets, like very quick. But if you can't, then you must swing trade. All right. Everyone that approaches market, they approach it in a different way. Make sense? So let's go on the next slide. Benefits of scalping and day trading. All right. Ideal for those who want to want quick in and outs, right? Just like I mentioned. Reduces overnight risk since positions are closed the same day, right? Who here does not like to take their trades to the next day? Who here does not like to take their trades to the next day? I mean, depending on the market condition, all right? Depending on the market condition, it's, and like I said, I'm going to show you a live example, all right? I'm going to show you like a live example at the end of this slideshow. But again, if you don't want to like take the risk and take to the next day, then what you want to do is just sell it that trade. Because people think that beginners think that, okay, when you open up an option contract or when you hit the buy button, you have to hold it all the way till Friday if you're doing options. So remember that. That's one of the things that when I started option trading is that I thought that I have to buy a contract today and hold it all the way till Friday. But that's not the case, because what you're doing is you're buying temporary contracts from this day, and it can be sold the same day. It can be sold the next day, or it can be sold within the next 2 to 3 days. I don't have to hold it all until Friday, because I remember, now that I remember, there was this one point that I bought a trade. And again, I didn't know what I was doing. All right. I bought an option contract and then I held it all the way till Friday. But I was up like $200 and I was up like 350 and then 400. And then what happened? I lost it all just because I held on too long. Is there a penalty for holding a while? No, there's no penalty, because all you're saying here is that I want to buy this contract and I want to sell it to that day. And that's going to be on weekly contracts. So it can be the same week, it can be the next week. But again, you're buying options, contracts, and you can do whatever you want with it. And that's why we said, how do I choose the best avatar in trading? Is it going to be scalping? Is it going to be day trading? Is it going to be swing trading? Which one it is, right? And so, like I said, that's the benefits of scalping and day trading. Great for those who can focus on short-term market moves. That is telling you that scalping and day trading is for the people that can be on these screens for like maybe an hour, maybe 2 hours, or maybe just all day. But they're looking at the micro time frames. They're looking at the 1 minute time frame. They're looking at the 5 minute time frame, because what they're doing is they're analyzing the lower time frame orders. All right. And when I mean orders, is those green and red candlesticks, because the lower time frames that you go, like a 1 minute, 3 minute, 5 minute, 10 minute, that is fast money coming in, or that's fast orders that's being presented from the institutions, and they're applying onto a chart. So keep that in mind. All right, keep that in mind, because again, if that is too fast for you, if it's a much more fast paced, then we move up the time frame, and that's where things can become a day trade, or it can become a swing. I have a friend of mine that goes on TradingView and they trade on the the 15, the 5 second, the 1 second, and they're in a trade for like just 1 minute max, and they're done. Doesn't that sound crazy? Doesn't that sound crazy that they're using these like very low time frames on TradingView? And TradingView is a website where you can chart stocks, crypto, Forex, and things like that. It's crazy, right? But all in all, they know what they're doing because they understand technical analysis. All right. And remember, if you want to learn tech analysis, the ebook is inside the Discord. Also, there is videos inside the Discord where you get access to, so you can start, starting to learn more about tech analysis. So again, tech analysis is very important for one to, to know and understand. Okay. So let's look at this one. This is what I was just talking about a minute ago. Swing trading for 9 to 5 workers allows traders with full-time jobs to hold for trades for days and weeks. All right. And remember, this still comes from what avatar do I want to pick and apply into my trading journey? Is it going to be day trading? Is it going to be scalping? Or is it going to be swing trading? So let me know in the chat if we're still following along. Just want to make sure that this is all making sense. And yeah, today we had a slideshow. All right. Today we're having a slideshow. We're doing something new. All right. It's making perfect sense. Amazing. All right. Amazing. So swing trading for 9 to 5 workers. Allow traders with full-time jobs to hold trades for days or weeks. Okay. So for me, if I went and pursued another business, or, let's just say a restaurant business or a construction business, and I can't be on these screens as much, and I still love the stock market, and I know what I'm doing, I fully master tech analysis, then hey, I'm going to start swing trading. I'm going to go on a higher time frame and focus on that. Because if I'm on the 1 minute or just a very low time frame, it's not, it's not going to help for me. All right. And for damn sure, I can't be on these screens every single second, every single minute. So let me swing trade. And that's what I got to do. If that's my schedule, then that's where I have to readjust and, go from there. Okay. And so less screen time required compared to day trading. This is what I just mentioned, that you don't have to be on these screens as much. All right. You don't have to look at your, because sometimes for me, it's like, when I was in trades, or this is just like basically newbie me, like didn't know what I was doing, is that I was just driving and just like looking at the option chain, looking at the market, trying to enter exit while I was freaking driving. Has anyone done that before? Have you ever were driving and you're looking at like the charts and things like that? I mean, be honest, be transparent. That's I've done that. I was driving, and then I got stopped at a stoplight, or yeah, I stopped at a stoplight, and then from there I was just looking, and I was like, for 30 seconds, a minute, and the whole time was green. People in the back were just honking. I'm like, oh snap. And so again, don't do that. All right, that's very, very risky. All right, for your portfolio and also for your life as well. All right, so be very careful. All right, we don't want to end up in an accident. All right, I don't want anyone to be in an accident. So remember, if you don't have time on these screens, then hey, let's put the phone down, and whenever we pull over, and that's when we can look at the charts. Okay, so just like I mentioned, less screen time required compared to day trading. Can capitalize on larger trends over time. And what I mean by that is that if you are right, because you're saying that I want to buy at this X price, let's just say I'm buying in at the $30 price and I want to target the $60 price. So that's like a $30 jump, right? But you can see that you have much more advantage to be in profit because you're holding onto the trade much more longer. But it still requires, again, the technical analysis. If you don't know on what technical analysis are, it's pretty much things that's going to tell you when to buy, when to sell, and when to get out if it doesn't go the way that you wanted to go to. Okay. And remember, that's what I have inside the Discord, step by step, on teaching you how to do that. There's a complete ebook as well. So yeah, that's just pretty much the avatars that we can see, that day trading, scalping, and swing trading. And if I were to have like a 9 to 5 or a business going on, then swing trading would be the way for me. Okay. All right. So understanding candlesticks. All right. So what I want to do on this one, actually, let's see what a candlestick is. So I don't think I can draw on my screen, can I? Oh yeah, I think I can. So let me know in the chat if y'all can see my drawings. Let me know in the chat. Can y'all see that, look like that little red box that I just drew? Yes. Okay, cool. So what is a candlestick? There is 3 types of candlesticks that you must know, all right? But they all mean something, okay? They all mean something. A candlestick on the chart, and how do you view candlesticks is go on tradingview.com and go on to any chart, go to Dogecoin, Bitcoin, it can be Apple, Nvidia, Tesla, whatever it is, but you're on this chart and you're seeing a wide range of candlesticks. What a candlestick is just a order from the institutional that they either placed a buy or it's sell. And also it's going to tell you as in what happened within the month, what happened in the week, what happened within the day, what happened within the hours, and also what happened within the minutes. Because all it's just representing is that it was either a buy or a sell. Okay. And so if I were to look on the S&P, let's say, for example, the market yesterday, yesterday on that 1 day time frame, it's a red candlestick, right? If I were to go on a daily time frame on TradingView, it's a red candlestick. All right. Will there be another class like this next week? Yes, there will be. So it's inside the school class. So a doji is indecision, all right, because there's 3 types of candlesticks. A doji is like this. Have you all seen that before? Have you all seen that type of candlestick before? So we have a few people saying yes, yes, yep. So all that's saying is that there's indecision. And what that means is pretty much price stopped, buying up, and also they're confused as in, should we go down? Should we go up? And that's where it creates a doji candlestick because it's indecision. And remember, I'm breaking this down step by step, and this is very, very basic. When I was learning candlesticks, when I went on YouTube, I was like, oh shit, this is kind of really confusing. But I'm doing my best here to break it down very, very, easy. Okay. So all you see when this whole doji candlestick is just indecision, there's like really no buying going on and no selling going on. And that's what forms this doji candlestick. All right. Sometimes it's going to have like something like this within it. All right. Because there's different types. All right. Something like this, maybe smaller, but all in all, as long as you see the same exact thing. You stream somewhere else. Yep, on school here. That's it. Also engulfing. So now has everyone, oops, seen a candlestick like this? Has anyone seen a candlestick like this? So let me I want to see if I can make it green. So look at this. Oops. Let me try to make this greener. All right, look at this. The left one means a sell candlestick. That's a full sell candle. All right, that's showing us that is telling us, let's just say, for example, we're on TradingView, we saw the daily. This was yesterday. If we go on SPY chart and we go and click the 1-day chart, you will see on Friday, it'll show you this candlestick, right? It'll show you a red full candlestick because what happened on the S&P yesterday? A full nosedive down to the downside. But now let's just say we go into Monday and now we can see a green candlestick. But what does that mean? That same day, that one day on a Monday closed green, meaning that there was buyers coming in. All right. And that's what it means that, it could be a reversal, it could be momentum, but these are the two types of candlesticks that we see on a chart on a daily basis. But now think about this. When you work your way down lower and lower and lower time frames, you're going to start seeing a lot of this. You're going to start seeing 50,000, 100,000, a million of, green and red candlesticks. But you have to trade all of those candlesticks. No, the hell you don't. All right. You don't have to. Because all you're doing is you're reading and analyzing more about these candlesticks to see how can you enter and find the opportunity. And for the way to, all right, listen, for the way to find an opportunity in the markets is from your technical analysis. There's different types of technical analysis. There is chart patterns. There is supply and demand. There is support resistance. And those are the main ones. But what do we do inside the Discord? What do we trade main? Or what do we mainly trade? Supply and demand concepts. Is this video being recorded? Yes. All the sessions that we do on a Saturday morning, it's all recorded and it's posted in the school class. Okay. It's posted in the school class. So now, since we already know that this left one is the doji, the second one here is the engulfing because it's just long engulfing candlesticks. It can mean a reversal of momentum depending on the trend. And that's, again, if you want to learn more about that, then make sure to work within the whole Discord. All right. So let's go into the hammer and the shooting star. So the hammer and shooting star is basically the same exact thing. So it'll be something like this. Has anyone seen this before? So let me just give me 1 second. Don't answer yet. Has anyone seen that before? This whole like hammer right there. And what does that remind you of? That reminds you of like Thanos hammer. If anyone here watches Marvel, or Avengers, that's Thanos hammer. All right, think of it like that. That's Thanos, or not Thanos. What's the name? What's that one dude's name? His hammer. Forgot what his name. Thor. My bad. Thor. Yeah, Thor. That's Thor's hammer. Okay, that's Thor's hammer, and that all that means that there can be what? A trend change, but that also is a wonderful indication because that can be meaning that money is coming in, and that's very important at a key zone or key level. So maybe right now, if you're learning more about support resistance or supply and demand, that's that one candlestick that you want to see because that's going to be your best friend. All right, listen up. That's going to be your best friend when you are waiting for price to come into your support or your resistance levels. So let me just show you real quick. Just like that. That's what you want to see. All right. That's what you want to confirm with, is that you want to see that candlestick on your support level or your demand, because that is showing you that right there is a rejection. And that's why it's called a hammer, because at one point it was looking at like this red candlestick, but it became this hammer. And that shows you that what? It's a shape as a hammer, but also means that there was a big rejection off of that support level. So let me know in the chat if that's all making sense. All right, let's do like a little quick pause. Is that all making sense? And so again, today we're doing something different. We're doing a slideshow, and let me know if this is helpful, like these slideshows, because this is something that I'm just now implementing. Let me know. Are these slideshows helpful? Throw a fire emoji or something. Throw something. Let me know. So I can just like, again, perfect these slideshows and just make it better. Because again, I want to transfer the knowledge, transfer the information so you can get this down and you can rewatch these recordings. Perfect. Nice. We have a lot of people throwing, some emojis that this is all, very great. So now the difference between bullish and bearish candlesticks. This left one right here is, again, a big sell candle. So we're covering this one. Bullish and bearish candlesticks. Bearish is this one, this whole sell-off. All right, that's a bearish candlestick. That's telling you that money shot down or money has been withdrawn from the market. But now when you start seeing these green candlesticks, that means that money's coming into the market. All right. So that's the terminologies that you need to know, that if someone says, oh, I'm bullish, that they mean that the market is going to go higher. All right. And whatever Discord you're in or any other group, or if you're just basically brand new, if they say bullish, I'm bullish on this, you want to see green candlesticks. If they say they bearish, then that means that they want to see red candlesticks. Because in the markets, stock market, Forex market, crypto market, doesn't matter. You can make money on both sides. All right. You can make money on both sides. And this is why I say understand the candlesticks. It's very simple. You don't have to watch hours and hours and hours of long videos on YouTube. I'm pretty much just putting it right to right here. Very simple, breaking it down. All right. And this is just what it means. All right. Because again, I remember watching just videos, like video after video, hours and hours and hours long, and I was still confused as shit as in what the hell was a candlestick mean. So why do candlesticks matter? Can anyone guess in the chat, or if you know, why do candlesticks matter? Can anyone like volunteer and let me know why do candlesticks matter? Let me test some, some little knowledge here. Why do candlesticks matter to us? Anyone in the chat? It's good, but I want to learn demand and resistance line from the previous days. Yeah, so link in the bio. If you want to join these school classes, link in the bio. So, all right, let me just show you that there is. All right, we have, it helps with volume. It helps with entries. Okay, cool. Gives you a range of history of the markets. There you go. There you go. And this is just what I said like 5 to 10 minutes ago. Shows price action. It shows which way the market is going. Determines the trend. Perfect. Gives you an idea of what directions it's going in. Wonderful. Wonderful. I love all those answers. I love all those answers. All right. Great job. So the candlesticks, again, it just tells us a history. All right. It gives us what, idea, like, unknown 13 said, as in what it can do, because it all represents either a sell or a buy, but that is what creates our support resistance. That is what creates for us to analyze a market. All right. And so this is why, again, understanding the candlesticks is very important. All right. So let's go to the next slide. So yeah, let's see. Let me delete these drawings. Let me see. All right, I think it's this one. Trend identification. Okay. Trend identification. So in the markets, you can see that the long-term, like overall stock markets, usually all stocks are doing what? They're all going up, right? That's what the whole stock market is doing. So let me just do this right here. On a bigger picture, oops. That's what the market is doing on a long-term view. All right, that's good for long-term investors. Okay, that's good for long-term investors that's, doing shares and things like that. But remember, if you're like day trading and scalping, then that higher time frame doesn't mean crap. All right, doesn't mean crap. Why? It's just because day trading scalping, we have the hardest job, but we can keep it simple for ourselves because we know these things: technical analysis, discipline, and also marking up key levels. So this is where, again, we have to go into this major upper move on lower time frames, and we have to break it down ourselves. That's why traders just like us, day trading, scalping, or just short-term swinging, we have to break this uptrend down, meaning that we have to see what are the in and outs going and happening in that uptrend. Because again, SPY, if you look on a weekly chart, on a daily chart, it's just going up. That's what all stocks are doing, really. It's just going up. It's just going one direction. But that's not enough information. I don't need that information. What the information that I need is I need to trade the in and outs of the market. So I need to go lower on these lower time frames so I can see what I can do for the day, what I can do for the morning, what I can do for the afternoon, what I can do for the next 2 to 3 days. That is what I need to do. That's my duty. That's my task. And that's why I say, pick what avatar you need to choose for you to approach in the market, right? And remember, what did I say? It's either scalping, or is it day trading, or is it swing trading? Which one of those is going to be the one that you choose? If you have no idea, then I want you to sit back this weekend and learn more about scalping, learn more about day trading, and learn more about swing trading. And that's all in the introduction inside the Discord. And this is why I really want to push education to everyone, because we are building a skill. That's what we're doing. We are building a skill for us to get the results that we desire right now, but we know it's going to come. But how is it going to come? Is by putting in the work right now. Does everyone agree with that? Let me know in the chat. Does everyone agree with that? Because if you really want to get out of the 9 to 5, if you really want to make this like a real business for yourself, if this is really something that you really want to, get down, then you have to take the action, put in the work. Because 90% of the people, and again, this was part of me when I was just first learning, is, oh snap, I want to make money, I want to make money, I want to make money. But then it's like, I lost a lot of money. And now I can say the market is, we can say, a scam. And that's what most people say because they don't want to put in the work. But that's where we are here for. And we're attending those live calls that we do Monday, Tuesday, Wednesday, Thursday, and Friday. And now we have added a Saturday free coaching call in the school community. All right. And if you stay consistent with me, we're just going to take it to the next level. All right. And that's what we're doing. Okay. So back to this trend identification is that the market is just going up long term. But when we look at like lower time frames and we want to translate, oops, let me see, where's my drawing tool? And let me just change the color. And if we want to translate that onto like a lower time frame for us day traders, what are we going to see? Most likely this. Most likely this. And you're going to be like, what the hell am I looking at? What the hell am I looking at? You know, it's like that uptrend is very simple on a bigger time frame. But now when I go lower, it starts looking like this. Has that happened to anybody here? When you go in the bigger picture, like on a big time frame, long term, it's going up. But now when you go onto these smaller areas here, what does that mean? It's like a lot of noise. So it's noise. So much noise. But this is where we have to break it down the best way that we can. Is that noise is we love noise because that gives us potential opportunities for the market, for us, for ourselves to day trade and scalp with, because all we're doing is just we're rating more of the health of the stock, the ETF, commodity, whatever you're trading, and all you're doing is just seeing the up and down movements. Has anyone seen that maybe 1 week is all red, and that's what you're seeing on your notification or your charts or the updates, but now the week after that, it's all green? Has anyone seen that, like on the markets? Yes? Cool. So now that we have that, it's like, okay, cool. That gives us day trading and scalping opportunities. All right. And so that's just what's, going on. And then from there, the second one, that's where you see the market doing this. All right. So let me just fill that in. And also sideways movement. These are the three things that you have to learn to see as in, okay, is it worth trading? Sometimes the market's going to look like this, that's going up. Sometimes you're going to see lower highs and lower lows, which is a downtrend. Sideways movements, that's a no trade zone. Okay. So on this uptrend, what does that mean? Institutions, traders, retail, they're all in demand of a price. Everything here is from like basically supply and demand. All right. Supply and demand. So in this case, the top is showing you that there is high demand in the markets, and that's just pushing the market up higher. Is that making sense, everybody? When there is high demand of something, the value increases. Yes. And that's why I say when there is high demand, for example, Apple, PLTR. Did anyone see those two recently when there was just shooting up, shooting up, shooting up? That's high demand. And what does that mean? That means that there's going to be a lot of volume that's coming into these markets that's pushing that stock up. Because again, if there's demand, then those are the ones that we want to keep on our watch list for us to trade. So that means that there's high demand. But let's just say if there's no demand and nobody wants to buy this and there's just too much supply of it, then that's where you're going to start seeing the market just downtrending. And so that means that there's going to be supply. Okay. And this is also is the root of the way that we trade supply and demand zones. All right. Because when price comes into like, let's just say a demand box or a support line, then that's where we want to see demand roll in. But for example, yesterday, on the S&P, what did the market do? Which is flush, 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 flush. And so that just means that there was a lot of supply. Okay. And remember, even though that you're learning all this, you're still trying to find a way as in your style, your groove, and then from there, it's going to tell you as in, okay, this is where I can enter, this is where I can exit. Because most people, you know, again, they're now programmed. And again, I'm saying like newbies. And again, this is part of me when I was just first starting is that, oh, snap, SPY drop, 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 drop. And I'm thinking about how much money I could have made. And that's now programmed into my mind for the next week. And that's what I want to force myself into. But that's not the way. Because in these trends that you see on the charts, all you need is just a little piece. A little piece of the cake. Let's not be greedy. Let's just get a little piece. What's that green and red line at the top? Demand. So this is demand, just row demand, and this is like an uptrend. So uptrend, downtrend. Is there any questions though? Let me stop for a bit. Let me stop like a minute. Is there any questions about this on this trend? Any questions? Are we all good? Let me know. Let's take a little pause for a bit. And also, if you haven't watched yesterday or last week's recording, last week's recording was about picking the top stocks to trade. And now today we're just, you know, keeping it fresh as in for beginners, or just pretty much get like a refresher here. Where is the recording? Inside the school class, inside the school community class. Good. We're all good though? Okay, cool. Cool, cool, cool. So now in the sideways movement, who here has lost so much money in the sideways movement? Do you have these recordings saved somewhere? Yes, in the school. Link in the bio. Me? So we're saying me. Okay, cool. So, well, not cool, but it's cool now because now we're learning here as in how we can prevent trading in sideways movements. Okay. So in the sideways movement, so let me just delete all the drawings and let me just make this better. Let's do this. In a sideways movement, sometimes you're going to see something like this. All right. And that's what a sideways movement is equal highs and equal lows. It's all neutral. It's not going up higher. It's not going lower. Sometimes, yes, when I was trading a one-sided market like this, I got stopped in here. And that's where I'm like, I don't want to be a part of this. Let me close my trade. And that's, again, one of the things that you have to do as well is that when you're in buys or when you're betting on the market to go higher, you can be put into a consolidation phase, which is also known as a sideways movement. And that's where we have to get out of there so we can just now wait until it starts picking right back up again. And so the key thing here is after or wait after a sideways movement ends. Either if it wants to go below, then show me that. If it wants to go above, show me that as well. Will you see a lot of doji candlesticks going sideways? Yes, you're going to see wicks. You're going to see wicks up here, down here. You're going to see a lot of wicks within the body of the candlesticks. And that is what a type of trends are. And again, we're covering 3 types of trends here. An uptrend, a downtrend, and a sideways movements. This is the things that you're going to face when you are looking at a chart, and that's what's going to be shown to you. But you have to know on how to play that, right? If it is worth playing. So remember, you don't have to be right about every single move in the markets. Even for myself, I'm not right at every single movement. This is why stop losses, this is why risk management is very important. And that's what it is. It's like at the end of the day, we're learning on how movements work in the markets, but you also have to be well disciplined when you are wrong about a movement. And so let's just say, for example, if I was trading up movement and I really wanted price to hit like a target price right here, and it didn't hit that price, I'm like, okay, I'm just going to accept it here. Even if it runs up like this, I don't care, because I, protected my gains, and I also protected my capital, because this could have been worse. We're not playing this whole what if game. And that's very important for one to know. Okay. Because the market doesn't care on how you feel, doesn't care on what you want, doesn't care what you expected it to do. The market is going to do whatever it wants. And that's why we build analysis. That's why we set key levels. And that's why we look for the best confirmation as possible. And so, but yeah. Can you teach us how to paper trade? Yeah, so it'll be like Webull, Robinhood. You can paper trade on all those accounts. What else? I think Charles Swap, E-Trade, you can paper trade, I think, too. I never use E-Trade, but I heard good things about E-Trade too. But yeah. Any questions about this though? Can we proceed to the next slide? Robinhood doesn't allow paper trading. Yeah, they do. Watch list. It's called a watch list. I mean, it's been like long since I used Robinhood. But yeah, there's a thing that's called watch list. So everyone in the chat, can we proceed to the next slide? Do you have any questions? Any questions at all? Ready? Okay, cool. So let's go to the next slide. All right, so now what we're going to do here is we're going to look at an example. All right. But that's going to be, I'll just save it to the end. All right, I'll just save it to the end. So let's go to the next slide. And so we're still going to do this example, but it's going to be towards the end. All right. So common mistakes to avoid. All right. So overtrading. Has anyone here been overtrading? Has anyone here overtraded before? Yes. And what was the result? And what was the result for overtrading? What other platforms are you streaming on? Just here and on school. Yes, I have. Not good. Another -1. The result's horrible. There you go. These are things that we have to fix for ourselves and to try to do our best. I mean, there's going to be times that, yes, I mean, it's not 100% like avoidable, but it's like we have to be well disciplined enough so we know when we can call it quits, as in, let's just end the day already. Because things can be like, okay, maybe we're up like $1,000 in the morning, but then we gave back like $600 towards like at the end of the day. And now we're like, what, $400 for the day, and you're up $1,000, but what happened? You overtraded. Okay. And so let me ask you this. What is the cause of overtrading? What's like the root of it? Why does overtrading happen? Can anyone tell me in the chat? I blew a combine overtrading or bench trading. Yeah, I mean, it happens. It happens. Let me know in the chat. Why does overtrading happen? Greed. That's the #1 thing here. Greed. How do people view money? How do people view money? That's what causes overtrading. They want more, they want more, and they want more. All right. Because think about the time that you were up one day and then you gave it all back, either the whole thing or now you put you in the negative just because you're overtraded. So this is why I say it's like, if you've been doing this for a couple months or maybe for a year, I really don't expect anyone to start making like $2,000-3,000 days. You have to start small, because what you have to do here is to really, prevent, this the best way as possible. And again, it's not 100% preventable, but we can have rules for ourselves. And that's based off of, again, discipline and patience. But where does that come from? Discipline and patience comes from truly from your technical analysis. That's where discipline and patience comes from. Yes, you can read all these discipline mindset books, but they're not going to help you because you haven't fully mastered technical analysis. Technical analysis is going to tell you when to buy and when to sell and when to wait for price to come back down to your level. And you're going to see that discipline and patience is going to flow in naturally. Do y'all agree with that? If y'all don't, let me know. Let me know. Because think about it. If price didn't come back down to your support level, you're going to be waiting. That's where you have to train yourself to just to wait for price to come back to your level. And this is why I say use a strategy and wait for price to come to your level. If it didn't come to your level, then that means that you're not trading, right? So all these, these other gurus, these people's like, okay, read a book. The hell am I going to get from a book right now? I need technical analysis to tell me when to buy and sell. And I know the discipline in the patience is going to flow naturally. And all I'm doing here is just waiting for price to come into my zone. But again, that's where, again, paper trading and back testing is very important. People want to skip those parts, but we're not going to do that. So this is why I say it's like, do 3 months, maybe 6 months, maybe a full year, so you can get ahead of others. Because all in all, you're building a trading business for yourself for the long run. We're not here to think in the short run. We're here to think in the long run. And another thing, if you're on a demo account or paper trading account, treat it like a real account. If you're just trading on a watch list or whatever in a demo account, and you're just like, whatever, it's just a trade, whatever, no, it's like you're not really going off your technical analysis. You're just doing whatever. That's basically like gambling, guessing. I remember I'd done that. Paper trading demo was like, it's whatever. It's fake money. It's fake money. But treat it like real money. That's where you're going to learn a lot. It's all in our mind. Our mind is the most powerful tool that we have as a human being. That's what's going to make us money. I'm preaching today. I'm preaching today on this Saturday live class. And so this is why I told everybody in the Discord, don't miss on this webinar. Don't miss on this webinar because, yeah, we got something, going on right here with this slideshow, something new. And I'm glad that, you all enjoying this slideshow. Another thing, ignoring stop losses. Has anyone here ignored a stop loss before? Do you even know what a stop loss is? I used to, yes. So we see most likely everyone ignored a stop loss, even myself. All right. We're all human beings. And again, this is just mistakes that we've done. I mean, we're human beings at the end of the day. We're not all perfect, right? We're not perfect. But it's on how we can set ourselves up for success is by doing our best to avoid things like this, over trading and ignoring stop losses. Right now, we're talking about ignoring stop losses. Ignoring stop losses is something like this. All right. So ignoring stop loss like this. Let's just say, and I'm going to just draw it out for you. Let's just say I have like a key level that I want to buy. And again, the way that I trade is supply and demand. So when price comes into my level here and price bounces up higher, and I get my special confirmation, whatever it is, break of structure, Wyckoff, new support resistance, momentum candle. There's so many confirmations out there. All right. And this is why I say just focus on one. Okay. And then this is where I enter, let's just say my entry right here. my entry right here. That's my entry. Let me just circle it out. This is my entry right here. And my stop loss is right here. Because this is where price stopped right here that caused the push to go higher. And now this is my SL. And remember, you're not always going to be right about the market moves or the price movements. Okay. And also another thing to add on, you're not always going to get a perfect entry. There's no such damn thing as a perfect entry. This is why stop losses is very, very crucial. So entry right here, entry here, stop loss here. And this is where you're like, okay, let me just. And hopefully, yeah, I should have made it like green, but let me just try to cover that. There you go. That's my reward that I want to get because I want the market to go higher. But now also, let me just do this red. Here, just in case if it goes lower. So let me just give you an outcome as in ignoring stop loss. So entry, stop loss, sometimes it's like this. Oops, still have the box. Let me put my pencil. So sometimes it does this. I'm like, oh yes, we're in profit. But now it's like, it can start doing this. And that's where I'm like, oh snap. That's like a manual stop loss that I really wanted price just to like, have. And let's just say we don't have it automatically, we just have it manually. Sometimes like, okay, stop loss was right there, but now its price is like ends up right here and we're still like holding. What does that mean, everybody? What does that mean if we're still holding? If price is below your stop loss level where you really wanted to get out, what does that mean? It starts with an H. We are now, starts with an H. We are now hoping, right? We're now hoping for this to run up and we disrespected our stop loss, right? So this is why ignoring stop losses is one of the things that we have to start, that we need to stop doing. Because if we get stopped out, then fantastic. Tell yourself that's fantastic. That's great. Now it's about how can I get myself back in the game? But you still don't have to overtrade. You're still looking for high quality setups. That's what you're still doing, right? And remember, even before having all this, you have to have a plan. If you don't have a plan, that's basically trading without a plan. You have to know where your reward's going to be, where your entry is going to be, and also where your stop loss is going to be. And that's what you want to do. Like, you really want to have a plan before taking a trade. You're not always going to be right about every trade, and that's okay. But the most important thing here is how can we look for more better setups? And that's pretty much what it is. So let's go on to the next one. Let me see if I can delete all this. Let me close this out. So now, have you ever felt like this before? Okay. Have you ever felt like this before? Let me know in the chat. Have you ever felt like this before? That lost money, didn't want to trade, but you end up on trading. You started like FOMOing, you got a bad result, this and that. And now you're like, dang, I blew my account for the second time. I blew my account for the fifth time. I blew my account for the 10th time. I keep on funding for prop firms. I keep buying, these challenges. I keep depositing. And there's no success. There's no result. Not sure, but I'm sure it's yet coming. This is the number one thing that we have to do, Aston. Let's do the right things. So Blue God said, not yet, but I'm sure it's coming. All right. I'm sure it's coming. Yeah, you're going to experience here and there, but right now it's like we can minimize it just a bit. All right. Minimize it just a bit. All right. But how we're going to do that is by the solution for you. So if you're serious about taking your trading to the next level, now it's time to act, right? Success requires commitment, right? Commitment. Are we all committed? Let me know. Do you all want to get this down? Do you all want to get trading down? Okay, cool. Perfect. Committed. We're well committed. We don't want to be committed for the short run. We don't be able to be like, oh yeah, I want to trade. I want to trade. I want to trade. I want to trade. But then now it's like, now when you get yourself into it, now you're like, I don't want to do this. I want to do something else. No, if you're really going to do this, because this is like a business that you're opening, that you're doing for yourself, that you want to bring in money, right? Because yeah, it's a business, but you are the CEO. You are in control as in what comes in and also what comes out. So this is why learning this strategy is very important. The technical analysis, the execution, and I'm here to help you with that. So everyone in this call, all right, everyone that's listening to this, let's lock in a free 30-minute call next week to sit down and map out your goals and build a real plan for you. How does that sound, everybody in the chat? We already got one person in. How does that sound, everybody? Great. So anybody, everyone, let's go on to, let me stop sharing my screen. And let me go into here. So what I want everyone to do right now is go on the school, right? Go on the school, hit the classroom. So let me know if y'all can still see my screen. Can y'all still see my screen? Okay, cool. So go to the classroom, hit right here. Click this, book your call. All right, book your call. And for the ones that's viewing, the link is in the bio, and that's where we, you can book your call. So book my call. That's all you have to do. And that's where we're going to sit down together into a real deal, help you to get started so you can move it to the next level. Everyone here is different. Maybe one is like beginners. Maybe we just started. Maybe it's like we're just learning. That's okay. Book your call still. Book your call. If you've been doing this for a while and you really want to start being consistent and start seeing, some great results or just a transformation, book your call. If you have like a 9 to 5 going on and you believe like this is something that's not like, that you can do right now, that's okay. Book your call. Anybody can do this. We can all dedicate our time to find a way to trade the markets. So once y'all do that, let me know in the chat that you have already booked your call. Because again, I want everyone to do this. All right, I want everyone to do this. And yeah, the link is in the bio. The link is in the bio. And yep. And then from there, it's like there's also a little PDF file to show you on how to work within the classroom. Vault trading curriculum. And so these are things that you can read over. There is, again, classes, every weekend. We do calls like this Saturday mornings. We have a free mentorship, free training, trading mini course, mastery, supply and demand trading. And this is all the recordings. So for the ones that are asking for the recordings, it's right here. It's right here. So look at this. Market cycle, live coaching, full group training, insane. And that's more about candlestick